Today, we shall discuss on agility in decision making and proactive strategic planning in the context of adaptability in Indian business. In the dynamic Indian business landscape, companies must be agile in decision making and engage in proactive strategic planning to adapt to evolving market conditions, technological disruptions, and regulatory changes. Indian businesses that combine these two strategies effectively have been able to sustain growth and maintain a competitive edge. Agility in decision making. Agile decision making enables companies to respond swiftly to market fluctuations, consumer preferences, and technological advancements. This involves first one, real-time market adaptation, quickly analyzing market trends and adjusting business strategies. Second one, decentralized decision making, that is, empowering local terms to respond to regional challenges. Third one, rapid innovation and experimentation, implementing new business models and iterating quickly. By flexible supply chain and operations, adapting production, sourcing, and distribution to emerging demands. For example, Reliance Jio's disruptive entry into telecom. Reliance Jio transformed the Indian telecom industry by making an agile decision to provide affordable data services with free voice calls. Jio rapidly built its 4G infrastructure, acquired spectrum licenses, and leveraged a digital-first strategy. The company's quick execution and aggressive pricing forced the competitors like Airtel and Vodafone to adapt or lose the market share. Proactive strategic planning. Proactive strategic planning ensures that businesses prepare for future disruption and opportunities rather than merely reacting to them. This involves long-term vision and investment in research and development. That is, by identifying future trends and investing ahead of time. Scenario planning for uncertainties. Preparing strategies for potential market or regulatory changes. Strategic partnership and acquisition. Collaborating with startups or acquiring key players to strengthen market positioning. Sustainability and digital transformation. Adopting environmentally and technologically forward the business models. For example, Tata Motors shift to EVs, recognizing the global transition to electric mobility. Tata Motors strategically planned its entry into the EV market. It proactively invested in research and development, developed its EV ecosystem, and leveraged its group companies. Tata Chemical for battery production. As a result, Tata Motors is now the leaders in India's EV segment, ahead of global and domestic competitors. Intersection of agility and proactive planning in Indian business. Successful Indian companies integrate both agility and strategic foresight to navigate uncertainties and drive growth. For example, Zomato's expansion and adaptability. By proactive planning, Zomato anticipated the rise of online food delivery in India early and expanded aggressively through acquisition. For example, Uber Eats India. Agile decision making. During the COVID-19 pandemic, Zomato quickly pivoted to grocery delivery and implemented contactless delivery, helping it stay relevant while competitors struggled. For example, Infosys focused on digital transformation. That is proactive planning. Infosys invested in cloud computing, AI, and automation well before the digital transformation became the mainstream. Agile decision making. So when global clients rapidly shifted to remote work during the pandemic, Infosys quickly scaled its digital services, ensuring seamless client support and business continuity. In conclusion, Indian businesses that blend agility in decision making with proactive strategic planning can effectively adapt to changing market dynamics, emerging technologies, and policy shifts. Companies like Jio, Tata Motors, Zomato, and Infosys demonstrate how a combination of real time responsiveness and long term vision can drive sustained success. Agility in decision making and proactive strategic planning in the Indian banking sector. The Indian banking sector has undergone significant transformation in recent years due to digitization, regulatory changes, and evolving customer expectations. Banks that combine agility in decision making with proactive strategic planning have been able to adapt quickly, stay competitive, and drive financial inclusion. Agility in decision making in Indian banking. Agile decision making enables banks to respond rapidly to market trends, regulatory changes, and customer demands. This includes quick adoption of digital banking, shifting to digital first models to enhance customer experience, real time risk management, adapting swiftly to fraud risk and cybersecurity threats, instant policy and product adjustments, introducing new financial product or services based on the real-time market trends. Flexible loan and credit offerings, modifying credit policies in response to economic disruption. For example, SBI's quick digital transformation with UNO, the State Bank of India demonstrated agility by launching UNO, that is, You Only Need One, a digital banking platform that integrated banking, shopping, and investments. SBI recognized the rising demand for digital banking and rapidly deployed UNO, making banking more accessible, especially for tech-savvy and rural customers. Today, UNO has over 50 million registered users and contributes significantly to SBI's digital banking transactions. One more example could be ICICI Bank's rapid response to the pandemic. During the COVID-19 lockdown, ICICI Bank quickly rolled out fully digital loan approvals and video KYC services, ensuring customers could access banking services without visiting branches. It also introduced ICICI Stack, an all-in-one digital banking platform catering to retail and corporate customers. This agile approach helped the bank retain customers' trust and also increase digital adoption. Proactive strategic planning in Indian banking. Proactive strategic planning helps banks anticipate future challenges, invest in innovation, and stay ahead of the competition. This includes investment in fintech and AI by partnering with fintech firms to enhance digital capabilities. Regulatory and compliance readiness. Preparing for RBI regulations in advance. By financial inclusion initiatives. By expanding banking services to rural and unbanked populations. Sustainability and green banking. That is by investing in ESG, that is environmental, social and governance initiatives. For example, HDFC Bank's early bet on AI and fintech. HDFC Bank anticipated the digital banking revolution early and proactively invested in AI-driven customer service and fintech collaborations. It developed Eva, an AI-based chatbot, integrated predictive analytics into its credit decision-making process. HDFC also partnered with fintech startups to enhance services like digital lending and wealth management. One more example could be of Axis Bank's strategic investment in sustainability. Recognizing the importance of green banking, Axis Bank proactively launched Sustainable Finance Initiative and issued green bonds to fund environmentally sustainable projects. The bank also incorporated ESG factors into its lending decisions, positioning itself as a leader in sustainable banking. Next is intersection of agility and proactive planning in Indian banking. Banks that integrate both agility and proactive planning successfully navigate disruptions while maintaining long term growth. Now, let's look into an example of how Kotak Mahindra's bank digital first strategy. By proactive planning, Kotak Mahindra Bank foresaw the shift to digital banking and started reducing its reliance on physical branches. Agile execution. During demonetization and the pandemic, it swiftly expanded its digital payments and contactless banking solutions. One more example could be RBI's regulatory adaptability. So, the proactive planning was the Reserve Bank of India anticipated the rise of digital payment and launched initiatives like UPI and e-rupee to drive financial inclusion. Agile decision making. So, when fraud risk increased, the RBI quickly introduced tokenization for card transactions, enhancing security. In conclusion, the Indian banking sector thrives on a combination of agile decision making and proactive strategic planning. Banks like SBI, ICICI, HDFC, Axis, and Kotak Mahindra have successfully adapted to disruption by leveraging digital transformation, regulatory readiness, and fintech partnerships. Going forward, AI, blockchain, and financial inclusion will be a key area where banks will continue to demonstrate the adaptability.